Welcome back to the Atlanta Startup Podcast. My name is William Leonard, your host for today, and I'm really excited to be sitting down with Claire Hansen, who is a partner at Firebrand Ventures. Claire, welcome to the podcast.
Thanks for having me.
Yeah, and I want to kick it off by just saying congrats to you on your recent promotion to partner. How does it feel to now kind of get to that next step of the ladder here?
Yeah, thank you. It's a fun big step, but it comes at kind of an interesting time in the ecosystem where the market has been a little slower, I think, as we all know, in terms of making new investments. So it wasn't quite the like climactic moment I thought it would be. All these years imagining that promotion, like imagining like late nights and like landing the deal that's gonna make or break you. Didn't
Yeah.
quite happen that way for me, just given the market, but it's still a great feeling.
Yeah. And I think it's just speaks to you and your character and your work ethic that you're able to land such a strong promotion in a down market like it is now. So again, kudos to you, but I'm excited to talk a little bit more about Firebrand here. So, I've been studying the firm for a while and I love the thesis of like reinventing the Midwest investment culture. I saw that on your LinkedIn and I immediately gravitated towards that. And I would love for you to level set here and maybe tell our audience about Firebrand, your thesis, how you all think about investing, stage, those types of things.
Yeah, absolutely. Firebrand is a $40 million fund. We invest in software companies at the seed stage. So we write initial checks into the seed stage and then we'll follow on. We typically are investing around $1 million. So that means we can lead small seed rounds. Well, these days they're small seed rounds. They used to be traditionally sized seed rounds. But we can also be a really good co-investor for larger seed funds who want to lead around and have strong co-investors. As you alluded to, our geography is a little unique. I'm based in Austin, Texas, and I work with two general partners. One is based in Boulder, Colorado, and one is based in Kansas City. So the firm was actually founded, to your point, in Kansas City with a focus on investing in companies in the Midwest, basically allowing them to stay in the Midwest instead of having to take investment from coastal investors and prior to COVID, it was very common for investors to insist that companies actually move to the coast in order to receive investment, right? So that was the kind of the thesis when we started, was just investing in kind of underserved markets and allowing companies to really build and grow in those markets instead of getting magnetized to the coast.
Yeah, I love that. I think we've seen the proliferation of early stage firms that are planted their flag in the Midwest. I've seen like Firebrand, 68 Capital, Flyover Capital, those firms that are bullish on the opportunity. I think we'll dive into that a little bit later in the conversation, but you've got a partner in KC, Boulder. You're in Austin. I know you're certainly not new to Austin. I know you worked at Capital Factory there for some time, but when you and I first connected a few weeks back, I resonated with your path of breaking into venture. So maybe you can unpack that a bit more. Your story is really fascinating.
Thank you. I'm glad it looks fascinating now because it was painful at times while I was going through it. But yeah, I'm happy to talk about it a little bit, and I'll try to keep it short because I took some twists and turns
Yeah.
along the way. But yeah, when I first moved to Austin in 2015, I was fresh out of grad school. I had taken an internship after completing grad school, basically to just get some experience outside of academia onto my resume. I moved to Austin with that little bit of experience, but I didn't really know what I wanted to do. And to make a long story short, I ended up getting a job working for an accelerator and micro VC here in town called Capital Factory. It's also a co-working and like event space. At the time, it was really the only co-working space in town. There wasn't even a WeWork here. So we were kind of a popular destination for anyone involved in the startup ecosystem or investment ecosystem. But as you mentioned, like the fascinating part about me taking that job maybe was that I wasn't trying to work in the investment or startup space specifically. I was just happy to have a job offer. It was an operational role, mostly helping with the accelerator portion of the business. So I was doing things like organizing, company interviews, gathering feedback from mentors in the ecosystem, taking notes in the Monday partner meetings, all the while not really understanding how much access I was really getting granted in that role. So that was sort of my first step into this space. But as I mentioned, I didn't really know what I wanted to do at the time. I wasn't, chasing after a role in venture, certainly. So I took a couple years to kind of try different things. I thought I wanted to work in a more quote unquote creative space. I didn't really even know what that meant to myself, but I just knew I hadn't quite found what I was looking for. So I took some time off and some time out of the venture space and worked for a hospitality brand. I worked for an e-commerce retailer. I worked for a friend who was launching a jewelry brand. I physically helped her make the jewelry, as well as like hosting events and pop-ups and that sort of thing. And one day I was on the street, kind of during that time period. I was literally walking down Congress downtown in Austin and bumped into someone who had been a mentor at Capital Factory while I worked there. And he was like, "What are you doing with all these odd jobs? How are you making ends meet? Come back to the ecosystem." And he referred me to a role as an investment associate working for an angel network that's based here in Austin. It's called the Central Texas Angel Network, or CTAN for short. At the time, it was one of the most active angel networks in the country. I thought I would never get the job after having such like a oddball resume at that point, but I did. I got the role. It actually ended up being a great fit because it gave me a lot of access and opportunity to participate on the investment side and evaluating deals, sourcing deals. But also it was a good entry point for me because there were a lot of operational tasks involved with running an angel network that I was actually pretty well, my experience actually was pretty well suited for. So I got to kind of use my existing skills to open that door into the investing side. From there, COVID hit, and I realized that the angel network business might not might not be the right fit for me for a long time, or for the long run. Anyway, just given that that our activity had slowed down quite a bit, and I had already been thinking about trying to find a way to join a venture capital firm. So I actually took a role in between my time at the Angel Network and Firebrand, actually working for the U.S. Army, which has a large presence here in Austin, specifically geared around innovation efforts. So I was in a role where I was helping essentially try to source companies to apply to specific grant opportunities for the Army, and meanwhile informing the Army internally on how to make those grant opportunities more compelling for venture-backed startups, as opposed to more like dev shops and those sorts of things. I was thinking about getting an MBA in that role so that I could break into venture, and I just got really fortunate that at that time, Firebrand was looking for a presence here in Austin. So as the ecosystem had grown, my partners John and Chris couldn't really keep a handle on deal flow from afar, so they were looking for someone to be on the ground here with an existing network. And I just got, like I said, the timing was just right for me to make the leap then in 2021 and join the team as a principal.
Nice. That's awesome. And right, you mentioned the oddball resume, but I think that can really be a strategic advantage for someone looking to break into a new industry. Oftentimes it's a good thing when you bring that culmination of experiences that makes you almost like a Swiss Army knife for the team. And it sounded like that really worked out for you nicely.
Yeah, it really did. And I want to double down on one point I think I made a couple times in my story, which is just that network was so key. My network, once I got the job at Capital Factory, basically the network from that job and then the network from working at the Angel Network really are what, propelled me into the venture space and was actually what John and Chris were looking for in a teammate down here. So in addition to the skills, just meeting people, being curious, being kind to people, it really goes a long way.
Yeah, it does. And it's so fascinating that your team, they were sounds like they were inundated with deal flow before they hired you. You had this Austin presence, and I've been talking to a lot of firms that have a regional scope and focus as of late, and one of my favorite questions is to ask them, like, how are you leveraging your geography and your scope to win what you believe and what you're convicted by to be like the most competitive, the best deals in the region or space that you're backing. So curious to hear how you all see your region, your geography, your scope as a true like competitive advantage over firms that are situated maybe on the coast or in Detroit or like Miami or something like that.
Yeah, that's a fantastic question. So, and I want to clarify one thing, which is that I think I mentioned our first fund was highly focused on investing in the Midwest. We're
Mhm.
currently investing in our out of our second fund. And since then the team has expanded. So now we have coverage in the Midwest from Kansas City, coverage in the Mountain West, with Chris being based there. And then Texas is a big enough region in and of itself for me
Right.
to cover Texas. But in addition, we look outside of those regions as well. I think one unique thing I always tell companies is that with us, you get access to talent, potential co-investors, in three markets, right? With us on your cap table. You don't just get the network of one town, or one region. You get power in the Midwest, Rocky Mountains, and Texas with our team. So that's one sort of pitch I give. I would say the thing I specifically find myself talking about, and you and I have talked about in the past, is just um, our check size is really nice for both leading investments, leading seed rounds, and also co-investing. So when we write those $1 million checks, we can and do lead many rounds. But for those companies that are oversubscribing, that are raising larger seed rounds, we also play really nice with bigger firms that want to write bigger checks at the seed stage, and we can slot in nicely as a sophisticated partner to those firms and to those founders. So I think that our check size is really also key in unlocking a lot of opportunities in our geographies. Specifically in Texas, there are a lot of big funds here that will invest in large seed rounds, and we can play nice with them, essentially topping off their rounds instead of needing to compete with them for term sheets. So I like that we can kind of play both sides of that as a lead or a co-investor, kind of depending on the dynamics in each of the markets that we cover.
Yeah, that's interesting. And I'm curious to hear, right? Because you all can write $1 million check either leading around or co-investing, like you said, with those larger firms. Like curious to hear how you all are thinking about diligence at this seed stage. I know it definitely varies whether you're leading around or you're co-investing, but curious to hear sort of your frameworks from a high level of how you think about diligencing a deal that you're leading or diligencing a deal that you're following in on.
Sure, yeah, and that's a great question. At the early stage, it's so unique, and different firms have different approaches. Um, at Firebrand, we don't have a strict process that we follow. We're very conversational. We really like to get to know the entrepreneurs we're working with, make sure that there's an alignment with values there, in terms of transparency, openness. We want to be the ones companies call or founders call when things are great, but we also want to be the ones they call when things aren't going so great. So that's something that we screen for regardless, and is super important, especially at the seed stage. Um, I would say aside from evaluating teams and founders, which I think is an obvious answer at the seed stage, the other things I've really look at are ensuring that the market is large enough, that there's
Mhm.
a large enough TAM to really make the investment, um, the potential for returns work for our economic model. So that's probably the biggest next thing we look for. And especially in some of the geographies we invest in, or that we look in, sometimes founders' mindsets aren't quite as like expansive as coastal companies. Coastal companies tend to know that if they don't sell for $1 billion, their investors aren't going to be happy. Sometimes in more underserved markets, that's a process we need to go through to make sure founders are aligned in terms of the size and goals that they have, um, for the company. So that's another big piece
Mhm.
we really vet for, is just ensuring that there's a large enough market to be able to have the possibility of exiting at a really nice value. The other thing I would say is just, I think especially at the seed stage, but I think this is probably true at other stages as well, is you have to have a little bit of imagination, right? You have to believe that the product that a company is selling today at the seed stage might not be the product that gets them to 100 million in ARR, right? Things are going to change between now and then. So I like to have that creative space to think throughout the diligence process and work with the founder, sometimes to kind of get me there. And then lastly, I think listening to our gut is important at the stage of investing. We look at only seed stage companies, and you get good gut feelings and you get bad gut feelings when you talk to companies. So I think really honing in on that in the diligence process, which kind of sucks for the founders because you can't always put your finger on it in terms of what feedback to give them. But that's also a really powerful tool that we use in diligence.
Yeah, I'll double click on the evaluation of the market size. I think most early stage, and I think every investor thinks about this, but especially at the early stage, like they're thinking, does this deal have the potential at exit, with pro rata to be a fund returner for us? Can this company, if we have a $40 million fund, $50 million fund, can this return 1x the fund at minimum for us? And I think a lot of founders are, like you said, there's maybe just a lack of awareness around vision and scope from an exit perspective of like, hey, if we don't exit for this amount, our investors are probably not going to get a meaningful return in this deal. So I certainly appreciate your thoughts around that. And
Yeah.
it's Thanksgiving week. Thanksgiving is in 2 days, but I saw you all recently announced a new deal in Austin startup called Handraise. So you all are actively investing right now. Curious to hear, a little bit about that deal and maybe some of your broader thoughts on the current seed market and maybe some things that you're seeing from a valuation perspective, or just what is getting you all excited to be continually actively check writing right now.
Yeah, that's a great question. And I'll kind of start by talking a little bit more about, I think, like broad trends we're seeing at the seed stage, before I tell you a little bit more about Handraise. But we're experiencing a lot of what the data is saying, which is that experienced founders are having, I don't want to say an easy time, it's never easy to fundraise, but a much easier time fundraising than first time founders. So we're seeing experienced founders, say with previous exits, especially, raising at really healthy total round sizes and also pretty, I would say, high valuations. I mean, we're still participating, of course, but higher valuations, I would say, as compared to the rest of their founder peers. So we're seeing those deals moving really fast. Those with the experienced founders moving really fast. Healthy valuations, healthy round sizes, often oversubscribed. And it's
Mhm.
kind of like a tale of two cities. We're then seeing first-time founders or those with little experience really struggling in the market, having a tough time raising, taking more dilution. So from a valuation standpoint, more investor-friendly valuations. And really struggling to hit the ever-moving goalposts that investors seem to have in terms of traction. So we used to say, oh, we'll talk to a company when they're kind of hitting around 10K in MRR, might be getting interesting. All of a sudden 10K in MRR doesn't seem like very much. And we're asking them to hit 20, 30 before we really become interested. So it's a tough game out there for founders, especially raising for the first time. With Handraise specifically, that's an example of more of that experienced founder raising around that came together pretty quickly. We didn't have a ton of time to do thorough diligence, but we're more making a bet on the founder, on the founding team, and on their vision for the product and the market. So that was one that came together quickly.
Mhm.
And another example of where a strong, larger lead took the majority of the round, and a few of us other firms were able to kind of top off that round. They ended up oversubscribing and raising a $6.4 million seed round.
Yeah.
So that would move quickly. That would move quickly. But we did invest over the summer. We invested in two companies that were kind of on the other side of the equation and were less experienced founders, but with really solid businesses, solid unit economics, nearing cash flow positive, at friendlier valuations for us. So we've seen and participated on both sides of the equation recently.
Yeah, I love it. I love it. And yeah, I think we're kind of seeing the same thing in the market right now is that the founders who have built a company previously, whether it had a successful exit, a flat exit, or it was an acquihire, right? I still think there are valuable learnings from just going through the motions of building a company and understanding, hey, this didn't work in this company, but now I can go back and execute on a similar or an adjacent idea and now go build it again. And one, you can kind of go back to some of the investors who maybe passed on your prior rounds and be like, hey, I'm taking another shot at this. This is what I learned. This is how I'm doing it differently now. And
Definitely.
yeah,
I was just about to double tap that what we think of as failed startups, I mean, that's just part of the game. If it's not really a failure, I mean, that's just one step toward closer to your big exit, right? So having even investors that invested in your quote unquote failed startup are great reference points to talk to new investors, new potential investors, about your work ethic, about your character, about how you make decisions, how you may have grown since that, again, quote unquote failure. So all of that, to your point, is just fantastic experience when you're hitting the fundraising market again.
yeah, for sure. And Claire, as we're wrapping up the conversation here, you and I were talking before the call just about your passion for learning and kind of growing your knowledge as an investor and expanding from many of the junior roles that you probably did with some of your internships and at Capital Factory to now serving as or to once serving as a principal to now serving as a partner and really taking on a lot of the tasks and responsibilities that go just beyond sourcing deals and just doing diligence, but really things that make a fund. I would love to hear your thoughts on how you're kind of seeing that and implementing a lot of the learnings that you're taking on in your day-to-day work.
Yeah. It's I don't know if there's like a clear answer yet because I'm in the thick of it right now of figuring all of it out. But what I like to remind folks is that, venture investing goes far beyond just making investments, which is I think what the kind of public understanding of venture capital is, or when I explain to my parents what I do, I refer them to Shark Tank as just an example.
Right.
But as we all know, and as your audience probably knows, there's so much more that goes into venture investing and running a venture capital firm. So in addition to investing, that means taking active board seats with your companies. I'm an observer on several boards currently, but hope to take on full seats myself sometime soon. So that will be a learning. And then behind the scenes, we're getting ready to fundraise our next fund. So everything from actually the legal formation of that fund and the different entities involved in a fund, to the actual fundraising, to maintaining LP relationships, to hiring and growing a team and maintaining a brand. I don't have it all figured out yet, but those are all of the areas where I'm looking forward to learning in this next phase. So currently I'm trying to figure out how to fundraise and what that means for me based here in Texas, how to pitch our fund, how to find high net worth individuals and family offices, fund to funds that are interested in a vision and an ethos like the one we have at Firebrand. So that's my current focus, but from there, I'm gonna have to learn the rest of the ropes of actually, like I said, building a lasting brand in the venture space. So that's where I'm spending a lot of my time and energy these days.
Yeah, there's a lot of, I guess they call it building the plane while flying it that happens in venture. And one of my good friends was telling me how he just sees it as an apprentice heavy business where you're learning from the partners, the GPs, the founders who have done it before. And venture is so dynamic. The fundraising environment for a fund is totally different now than what it was just 3 years ago. And so many of the lessons and meetings that happened then are probably irrelevant now to formulating a fundraising strategy. So it's a very dynamic and non-static industry, and continual learning is of most importance. So how,
Yeah.
yeah, go ahead.
Oh, I was just gonna say, I hope I am naive enough and energetic enough that this raise, even though I know it will be hard, it's hard for most funds to be raising right now. I'm hoping that it doesn't feel so bad because it will be the first time I've done it. So hoping that naivety will take me through.
It's all good. And the thesis is so fascinating. You all are, check writing right now. What is the best way for a founder who's listening to this conversation to get in touch with you or someone on your team for a potential investment, or another VC who just wants to reach out and potentially build a co-investor relationship?
Sure. Yeah. For potential co-investors, I'm available on LinkedIn. That's a great way to get a hold of me. Just include a little note when you send the request so that I have context of why you're reaching out. And then kind of for both parties, for companies and maybe other investors, our email addresses are listed on our website. So if you're interested in reaching out directly, you're certainly welcome to do that. I would say for companies, what really makes a big difference is if you can get a warm intro, either from another investor who we might have in common, or maybe another founder. That support from someone in our network really goes a long way. So those are much easier emails to respond to. We usually get a little bit of context from the person who's introducing us. So if there's any way for you to get a warm intro, those always help, but please do feel free to reach out directly if you don't have a warm intro available.